Welcome to SmithWeekly discussions, an occasional program for our members of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position along with your favorite beverage to enjoy the discussion. We remind our audience to examine our show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion today, we want to say thanks for questions coming from our audience of SmithWeekly, including Mark R., Paul M., Andy J., and Edward S. On the program today, we have a returning guest back to update. Mr. Jon Gilligan is with us. Jon is the president and CEO of Liberty Gold. The company is focused on advancing its Black Pine oxide gold project in southern Idaho, United States, to feasibility, permitting, and construction. In its most recent pre-feasibility study, the Black Pine project is expected to produce about 183,000 ounces of gold annually in the first 5 years of production, with an average of about 135,000 ounces of gold over its expected 17-year mine life. Liberty Gold also holds the PEA stage Gold Strike oxide gold project in southern Utah and the nearby Antimony Ridge project. Liberty Gold is listed on the Toronto Stock Exchange under the symbol LGD and also on the US OTC markets under the symbol LGDTF. Jon, thanks for coming back on the podcast. Welcome.
Andy, thanks very much indeed for inviting us. I'm delighted to be back here to sort of give you a sense of where we're going in Liberty and what's happened since we last spoke.
Just seems like just recently we spoke, but looking back on the schedule here, you guys have been quite busy, and it was back a few months back into July when we spoke, and you guys have accomplished a lot of work since we last chatted. Good to have you back on, Jon. Lots of updates to get into. First, why don't we start with what's happening currently, the ongoing drill program, where recent results are showing consistent expansion of shallow mineralization, adding ounces in the range front zone. Talk a little bit about those results so far, the next work planned on the program, as well as the schedule to complete and remaining results timing.
Yeah, thanks very much, Andy. We started a feasibility field works program sort of earlier this year. Around about May, we put drills to work in the field. And the purpose of that program was to do some very targeted infill drilling in the pre-feasibility resource model to upgrade inferred resource that sat inside the reserve shell, to upgrade that to indicated, so that at feasibility, that indicated would become reserve. So it's sort of easy access tons to go into the reserve. And we had a 40,000 meter program planned. The big single focus of that program was the Rangefront deposit, which was the one that we discovered in 21, which is sort of down the hill, very close to the proposed location of the heap leach pad. We drilled out 1 million ounces in the first 18 months, and we've kind of been picking away at it ever since. And what we found, and the results that we published earlier this week, sort of build on a previous news release on Rangefront a couple of months ago. We're finding that we're seeing significant potential to expand Rangefront, particularly to the north, underneath the legacy heap, and to the west. And not only that, we are finding higher grade material. So, in the order for us, higher grade is between 0.1 and a gram. That material relatively close to surface, within sort of 40, 50 meters of surface. And that's a kind of new discovery for us at Rangefront. For those who've had a look at the pre-feasibility study, the Rangefront came second, or at the end of the mine life, because it had a relatively high strip. So we started up the hill with discovery, mined through that, and then eventually all the gear came down in sort of year 8 or 9 to mine Rangefront. What we're finding with this drilling is that Rangefront is getting larger from a resource growth perspective, but it's also getting more attractive as a potential starter pit location. And there's some huge benefits for that. And I think you're going to see some further results on Rangefront come out over the next while as we finish up that drilling. It's a very exciting resource expansion opportunity for us.
Talk just a little bit more about future schedule here as far as what else you guys expect to accomplish with this program. Seems like it would be continuous. You guys will keep working through the winter time, but just talk a little bit about schedule ahead.
Sure. So we've just brought in another drill rig. So we currently have 5 rigs turning in the field. We will drill through just before December. Our current schedule has us completing the resource infill work and resource extension work, the water well drilling that we're doing right now for monitoring wells as part of our compliance program. We'll get that finished. We've finished some geotechnical core holes, particularly in the high wall, both of the Rangefront pit and the Discovery pit. So that drilling is done. And we're right now in the process of doing some additional metallurgical core drilling in Rangefront. The sampling that we'd done in Rangefront was to feasibility level, but because Rangefront has now grown and is growing significantly, we need additional samples to give us that sort of average sample coverage over the new volume. So we're doing that right now. All of that drilling work, we intend to finish that before the winter. And so that finishes up feasibility resource, feasibility met, and feasibility hydro, and feasibility geotechnical work, so that going into the spring or into sort of January, February, March, that's the time we'll be doing the feasibility level mine planning work, so strategic optimization and ultimately detailed pit design. And that then leads in the second quarter to the engineering piece sort of proper, where we're doing the final feasibility level design of the heap, the processing facility, which is called an ADR plant, and the other ancillary mine gear, for example, the truck maintenance facility, the front gate, the substation that we need, and some offices. So it's relatively simple from a sort of individual elements, and we think we'll have all of that completed at the end of Q2 next year. So Q3 will be the final cost estimates, operating cost estimate, capital cost. We'll probably have a cost basis of June or July, so that's when we'll get the quotes in. And then all of that gets rolled up into the sort of the feasibility study proper, which we intend to publish in October next year.
Great schedule, great outlook. Thank you for going through those details. Looks like you guys will be able to keep working throughout the winter time, whether it's in the office and also a little bit of site as well. So that's good. Back to some of the results you guys are getting here, with more coming, of course, on the drilling. What do you have to say about expectations, I guess, Jon, on how the production profile of this project will change as we get closer to that feasibility study release? Any thoughts on that?
Oh, very definitely. So just to sort of give you context for the discussion, at pre-feasibility, you mentioned in your intro, Andy, we had a mine design that was a 17-year mine life, produced 2.2 million ounces of gold over that period. Average gold production life of mine was 135, but importantly, we had that higher grade up front, which sort of juiced that early 5 years production at 183,000 ounces. And that all of that was based on a 50,000 tons of material fed to the heap and leached on a daily basis. At pre-feasibility, as you typically do, we studied multiple cases. So we studied a 35,000 ton a day case, a 50, and a 65. We settled on the 50 because it was slightly more conservative. It was a sort of a more natural fit to the flow of material out of the mine at our total material movement rate, and it kind of made sense. However, we went back post pre-feasibility, and we now think that the 65,000 ton a day case is actually a better case, particularly with the improvement in the gold price and the shift downwards in our cutoff grade. So obviously at $4,000 an ounce gold, we can mine to a lower cutoff grade than we could have done at $2,000 gold. That makes perfect sense. So we're going to have to adjust all of those mine plans accordingly as we do the work next year. But I think going to that larger production rate, a relatively small amount of capital. The initial capital at pre-feas was $327 million. We see a bit of stress from a capital point of view on some of the construction materials, for example, steel. We think labor is going to show some stress. Tariffs are going to have some impact across the board in terms of some of the gear that we need to build this. So we're currently predicting a sort of 10, maybe 12% escalation on that initial capital figure. So I think that's going to be in the 350, 360 kind of number. But I think increasing that production rate gets you to above 200,000 ounces a year for the first 5 years. And I think that's a real sort of, that's an important psychological hurdle for us. We believe that that's the natural sort of size or capacity, if you like, of this asset. It's a 200,000 ounce a year for a significant period. And I think with the flexibility that we have in the cutoff grade, we'll be able to do some work post year 5, year 6, year 7, where in pre-feas you see a drop off in production. I think we're going to have a very good chance of sorting that out at feasibility. And obviously, as the mine evolves, there'll be ongoing drilling, and I think there'll be more discovery and certainly life extension opportunities. We very much see that the mine life is in excess of 20 years. The 17 that we had at pre-feas was really a snapshot. And to give you sort of some numbers behind that, at pre-feas we had a 5 million ounce, just under 5 million ounce resource. We're targeting closer to 6 for the feasibility resource, and the reserve, we had a just over a 3 million ounce reserve. We're targeting towards 4 for that reserve. So we're going to see a very positive movement in the sort of the dimensions and capacity of the project going from pre-feas to feas. And I think we're going to see, and obviously as a result of an improving gold price, we're going to see an altogether better project at feasibility than we showed at pre-feas. And that's sort of, that's a somewhat different. Quite often in the industry, the feasibility study is worse than the pre-feas, and the pre-feas was worse than the concept or preliminary economic study. So everyone gets excited about the first and then progressively disappointed. We decided we wanted to go the other way and sort of, sort of undercommit and over-deliver. And I think you're going to see that come out nicely in the feasibility next year.
Yeah, that's the right way to do it, John. I appreciate you going through that. Under promise, over deliver, that wins all the time. And I think crossing that threshold at 200,000 ounce annually, at least in the first bit of the mine life, that's going to be a key as well for potential suitors who are looking at this company. It's already a notable project within domestic US. And then also, I think that, as you guys go through the permitting work and as we get into construction and you have the build time, that continued demonstration of the expansion of the production profile and the mine life will be a key thing for folks looking at this company for potential acquisition as well. And if not, it's going to be a great operator. So very good information on that front. Over to recoveries. You guys have been working on making some improvements on the recoveries. There was some news talking a little bit about recoveries and those improvements. Just talk a little bit about the recent results on this work and what further work will be done going forward here to improve the recovery efficiencies.
Great question, Andy. I mean, recovery for a leach operation, and in fact, really for any gold operation, is one of those absolutely key parameters that sort of a little bit gets forgotten. We spend an awful lot of time drilling out resources in detail, putting a lot of effort and money into getting an accurate sort of grade estimate in every single block in our model. Then we stick a sort of an average recovery number in each block and sort of imagine that that's a fine outcome. Doesn't do it for us. So from a company philosophy point of view, as an explorer, from day one, we're thinking about what does the met look like? We've had a discovery here. First drill hole looks great. Well, what about the met? Can we actually extract it? And so met and discovery have gone hand in hand in this project and indeed in other projects that Liberty and the team have been involved in. So we've got, to put some numbers on that, we've got in excess of 200 column tests on individual samples that have come from just under 30 drill holes all the way across the entire deposit. And each one of those samples has a suite of leach testing on it to characterize that individual material and then group individual samples into logical metallurgical groupings where the behavior metallurgically is similar, and then you model those groups, if you like, or volumes in space, and then you describe recovery inside those specific volumes with some quite clever equations. So we did that at pre-feas, and at feasibility, what we're doing is the test work that I just described happens from a drill core. So it's the core diameter is about 4 inches. So you crush that down to 1 inch and you put it in a column and you do some tests on it, or you crush it finer. You may recall, Andrew, we are targeting a run of mine heap leach. Run of mine means no crushing, no agglomeration, no conveying. So it quite literally means you blast the rock face in the mine, in the open pit, you load it into a truck, the truck drives physically on top of the heap, it dumps its load, a dozer flattens that off, and then you irrigate or you drip processing solution on that material, and that's the sort of the size of the rocks that you're actually directly extracting the gold from. So to have some confidence that the process works not only at sort of finer crushes, but also at that much coarser mine size, we do large diameter columns. So think of a pipe that it's 4 feet in diameter, 20 feet high, and we literally dig out of the ground in the rock face of the previous workings. The mine was mined in the 90s by Pegasus, so the mines are still open, if you like, or the open pits are open. So we've went in there with a digger and dug up 7 lots of 20-ton samples, and we've loaded those samples, about 15 tons, into those sort of vertical pipes, 4 feet diameter, at a sort of a size of around about 6 inches. And then we irrigate those pipes with the processing solution, and we extract the gold from that material. And that's a proxy for how the large heap would work operationally. So that's the sort of final stage, if you like, of that metallurgical process where you've done a lot of detailed test work on lots of samples all over the deposit. And you've taken a couple of key large bulk samples and you've done what's equivalent to pilot test work on those samples. And that really fixes your recovery at that coarser grain size, coarser sort of run of mine size. So how you dig it up is run of mine. And that fixes the relationships between the grade, how much gold is in any given sample, and the expected leach recovery at the size that we would expect to dig it up from the mine in. And that's the final piece, if you like, in feasibility that sets your recovery model. From there, you have a predictor of recovery that's sort of plus or minus 10%, which is the sort of accuracy that you're looking for at feasibility. When you get into production, you do another level of tests to go to another sort of round of accuracy. But this is really high quality work. All of our test work has been done at Capis Cassidy in Reno. They are very well known and very well respected lab in the leach world. Have built leach pads and have built and designed open pit mines. Very, very experienced group and have rigorous test procedures. So we're happy to have been working with them literally for the last 6 years in designing and ultimately executing this detailed metallurgical program.
I appreciate you walking us through basically the flow sheet there on the front end. You guys won't have all this extra capex of having to do all this extra processing, crushing, conveying, all the work there.
That's correct.
And if you can get your blast patterns correct, and obviously the strength of the blasts even better. I appreciate you walking the audience through that. It's good information for them and a bit of education as well. Okay, I want to shift gears for a moment. We'll come back into a few other things related, but another milestone for the company was the announcement during September that Centerra Gold made about a 10% strategic investment into the company, resulting in about 28 million Canadian dollars to the company. Talk about this deal and the rationale for bringing Centerra in as a partner.
So, yeah, look, thank you for the question, Andrew. I think, the journey around internal discussions on how do we fund ourselves sort of to get us through the sort of the doldrums of being a developer. As you know, when you're an explorer and you're discovering, you're bringing new news to the market. The market rewards that, something new, unknown where it's going to go, and of course the run up in share price and the availability for capital for explorers who are being successful is very, very well known in the business. Almost as well known is that once you move from sort of discovery into the hard work of deciding to actually try and build a mine, the market is, it's a very different market, shall we say, a bit less forgiving and a very different market. So raising capital to go through that sort of what's referred to as the sort of the dip in the Lassonde curve when you're a developer is a very interesting and critical piece for a company such as ours. And we've raised money through equity raises to shareholders. We've done a number of those over the years. They generally come at a discount to market, and when your share price is low, that can be quite complex and sort of painful dilution to shareholders. We completely understand that. Nonetheless, it is the sort of the mechanism that the companies like us raise money. I think where Liberty stands out is in two things. First of all, we have done a lot of divesting of non-core assets, particularly Turkey. And my predecessor, Cal Everett, I think did a fantastic job of optimizing those sales so that we put non-dilutive funds into treasury to enable us to have money to go drill Black Pine, to build that resource base so that we didn't have to go back to shareholders, more than we really needed to. So that, I think, has been a key distinguisher for Liberty. And secondly, one of the obvious options for us is to, for non-dilutive funds, is to bring in a strategic partner. The advantage of a strategic like Centerra or someone of that nature is they generally come in at a premium. So that's a positive to shareholders. It's an endorsement of the value proposition. It's also, those companies, anyone buying into a sort of 9.9 strategic obviously does due diligence. They do their homework about the quality of the asset, the quality of the team that's executing the asset. And if you can attract the right corporate into as a toehold or as a 9.9 strategic, it can be very positive from a market perspective. It's an endorsement, as I said, of the quality of the team. And I think, the market, if you look at companies that have done that historically, the market treats that quite well. So instead of going back to shareholders, knowing that we needed to raise funds sometime this year to get us through feasibility, to get a final feasibility study on which we would then go out and raise project finance, we felt that it was the right time and we had the right asset and the right people in place, the internal team, to attract a serious corporate like Centerra. And we are delighted that they chose to support us in the way that they did. They came in at a very nice 10% premium to our share price at the time. So they invested at 56 cents Canadian. That was seen very well in the market. And with the 28 million Canadian into treasury at that time, we now have a very healthy balance sheet. And what that's done for us, we have some warrants that are due next year and the year after, so in 26 and 27. And those warrants came with the couple of previous financings that we did. Those warrants are at 45 cents. So today we're a 75-cent stock, I think, Canadian. I think we could reasonably expect today that the warrants will be in the money next year, and reasonably confident they'll be in the money year after. But with those warrants coming in and the revenue from the warrants, with the money this year from the second payment of the sale of our TV tower asset in Turkey, that came in October, and next year we have the final tranche of that payment due, 2.6 million. So with the money from Turkey, with the warrants exercised in the money, and with the support from Centerra, we have enough money in treasury to fund the project all the way through, and fund the company all the way through to a construction decision in Q4 2027. So we don't have to go back to shareholders for an equity raise to keep us going. We are fully funded.
Yeah, I was just going to mention that you guys did receive the cash payment of about 2.2 million US dollars for the milestone payment with respect to the sale of TV Tower there, Copper Gold Project in Turkey. So with that and the warrant money coming in as it comes in, as people decide this will carry all the way through, do you think that at this point, short of, obviously you guys have the potential for continued discovery, market conditions can of course impact this, but at this point, based on what you've said here, no further need to come back to the market until construction finance is ready to go. Is that the thinking at this point?
That's exactly the thinking, Andrew. And, I think the other opportunity we have is, people often ask me, well, how are you going to finance this? How are you going to build it? And sort of my answer is, well, we need about 400 million to build this thing, 350 for the initial capital, and sort of a nominal 50 for working capital and, all that other stuff. And the sort of the traditional answer, of course, is some combination of equity and debt. And so, okay, fine. So, with that, of course, shareholders know that the company needs to come back to the markets to tap up some equity to fund that equity portion. And certainly, as sort of a standard stock answer, that's probably our stock answer. But I think, given, for example, that we only have a 0.25% royalty on black pine, that's it, which is, I think, quite unique in the US. We have a whole bunch of headroom just simply in that one metric, royalties. We could put on a more important royalty onto this project, and that could be part of a debt package. You could do gold loans, there's streaming opportunities. I think there's lots of opportunities for funding this. And one of those has the potential, I think, for us not to go back to shareholders for equity to build this. And certainly as we move into feasibility and we start to flesh out what those numbers look like middle of next year, we're very much going to be focused on, is there a financial opportunity to build this by some combination of monies, of debt in the broad sense of the word, that doesn't require us to go back to shareholders. I'm starting to think very seriously about that. So it is not inconceivable in my mind that we don't have to go back to shareholders through the entire decision and construction process to lead us to an operating mine. That is not inconceivable in my mind. So I'm working through that thinking, and I think it's an intriguing option for us.
Yeah, I think as you guys continue to put this together, that the royalty stream space will be falling over themselves to get in with some type of a deal. I don't doubt that for a moment that that's something that they've already been eyeballing, John. So you do have that angle. I do think leave it open to shareholders who have been supporting the company to at least explore some form of equity raise as part of it. Maybe it's a lot smaller proportion, maybe not, but definitely to give the opportunities to some of those long-term supporting shareholders, maybe plus a few more key shareholders, could make some sense here. And then, of course, the big overhang remains to be this big broad market and what happens in the meantime. Our expectation is things will go pretty smooth going forward here, but that's always part of it too, and how that's timed out. Give me an update on where we stand presently with the capital structure in terms of shares outstanding, John, and then besides Centerra, any other key shareholders you want to mention on the roster?
Thank you, Andrew. Yeah, so we're 505 outstanding, 595, I think it is, fully diluted. We hit a 52-week high yesterday, but we're in the sort of mid 70s Canadian right now as a share price, which we're pretty happy about. I think it's doubled over the year, and obviously, as you and I discussed, clearly we're seeing a response on the back of the gold price. But I think we're also seeing buying into the stock because we're starting to really articulate a simple, clear message about what does Liberty now look like. The migration of Liberty from a sort of explorer, science of discovery concept into a very clear development focus with a strong discipline on delivery of black pine into a 200,000 ounce a year producer with a build in 28 and metal late 28. I think that message is starting to get through to the markets, and we're seeing the stock, I think, positively react as a result of that recognition. We've got some way to go. and it's relatively early, and not only in terms of my tenure as CEO, but we're relatively early in this story. And so I think the stock's got quite a long way to go as this story starts to get understood and sort of fully digested by the market. So that's an exciting opportunity. And that's sort of, people ask me, well, why now? Well, I think now is because we're in the early stages of this sort of starting to understand what actually black pine is and what it can be down the road. So that's the kind of why now. In terms of sort of our longer shareholders, we've been very strongly supported by some of the really major players in the business. Obviously, Centerra came in at 9.9. They're our single largest shareholder today, but Van Eck is our second largest shareholder. They're at something in the order of 8%. Franklin Funds are the next one down. Merck's, all of those three, Merck's, Franklin, and Van Eck, have been very long, sticky money and strongly supportive of the story. RCF has been in the stock for some time, and we have a fantastic relationship with them. Conwave, Amati, Commodity Capital, Extract Capital are some of the names that are sort of the next sort of holding down, if you like, in terms of numbers. Great response from some of those, and we got some new names into the stock when we did the raise earlier this year. The other, I think, important player, I would be remiss if I didn't mention, Wheaton Precious Metals came in a couple of years ago. They hold just under 4%. And they came in, they hold that, it's actually a 0.5% royalty on black pine, but Liberty has a 50% buyback right on that. So when we modeled the pre-feasibility study, it's modeled with a 0.25% royalty, which essentially is negligible in the financial metrics. And I think that really, to your point, it really provides an opportunity in that royalty space. This is going to be an interesting project financing when we get the fees together and we go out to the markets to raise the funds. Looking forward to that.
Yes, absolutely. Some of these key shareholders, definitely, there's going to be some competition here, John. I'm afraid to say that's a good thing. But there's definitely,
I think you're right.
competition coming in here. Both mid-tier royalty companies and also some of the largers, which the royalty space is under quite a bit of consolidation. There's not that many players out there of size, and there's very few in the mid-tier area now. So you really just have a few big royalty companies now looking at these. Looking forward to seeing how you guys progress those discussions and when those come about in portions or all together. The company also, just switching gears, we'll come back to people in a minute, John, but the company also mentioned back in August that there was an opportunity to include legacy heap leach area into the mining operations. This will pick up more ounces. The gold price obviously is amenable to coming after some of that legacy material, certainly, and that even improves the economics further. Talk a little bit about this and what your expectations are to include this in the feasibility study.
Yeah, look, a fantastic question, Andrew. I think, it's an old adage, isn't it? If you want to find ore, or you want to find mineralization at any given mine site, have a look under the waste dumps or have a look under the processing plant. I mean, it's an old joke, but my word, how often does that come true? I've worked at a number of sites where we knew for sure that there was mineralization under that infrastructure, and I'm delighted to say, if that's the right adjective, I'm delighted to say that no different to us at Black Pine. We knew that the legacy heap, that's around 30 million tons of material that was mined by Pegasus, transported down, put on a heap, irrigated, had gold extracted from it. We had the production statistics, and we knew that they didn't recover enough gold. There wasn't enough gold recovered. When we did the calcs on what they should have got, they didn't get that number. They got less. And I think the official number is like a 63% recovery. And for that material, we would model, probably a 70+% recovery, round numbers. So we knew that something was a bit strange. I'd been itching to drill that to sort of discover how much gold's in it. And for a variety of reasons, we weren't able to do that until this year. So we put drills earlier in the year, we put drills on the heap. We drilled 24 holes, I think it was. And lo and behold, and we're in the process of doing a resource estimate inside the heap, so an official model, which will be compliant with 43101 and all that good stuff. But if you look at the average grades on the drill holes, the heap is running at about 0.22 grams a ton. So for us, that's ore. You can mine and process that economically and extract gold and make $1. So the heap is not a heap, it's ore. And when you look at what's called the cyanide solubility, so that's take a sample and you run a simple test of how much gold of the total gold content comes out in a cyanide leach, simple test. That's about 50%. And that's a kind of a good guide as to what recovery you might expect on a heap. So 0.1 recoverable, 0.2, 0.22 head grade, that's absolutely ore for us. And our intention is once we finish that formal resource estimate inside the heap, we're doing the correct metallurgical test work right now, columns and leaching, so that we've got a consistent data set on that rock in the heap. We anticipate that to indicate that it is economic and you can leach it. And it will then simply, in feasibility, become another source of material to go onto the heap at any given time. And I think we're likely to mine that relatively early on in the game, because you don't have to drill and blast it. Quite literally, it's free dig. So you run up to the heap with a loader and you just start excavating the heap, put that on the new heap, and it becomes a simple ore feed, relatively cheap, relatively close, fantastic. And that achieves two fundamental things. First of all, you remediate a legacy heap that has been closed out from an environmental point of view, but still has water draining through it and a water treatment plant that treats that water before it becomes discharged. And so it's a sort of a low-grade legacy issue. And of course, the design of the heap, whilst it was compliant when they built it in the 90s, that design is no longer compliant, and we have much more stringent controls. So what we're going to be doing is we're going to be digging up an environmental legacy situation, rehandling that onto a fully compliant, state-of-the-art heap, and so remediating that entire legacy heap, and then closing that out at the end of the mine life in a modern and controlled way as part of the overall mine closure. So that's a massive win for the environment. It's a massive win for the federal government because they're administering that heap, and it's a win for us because there's gold in it, and we get to produce that gold, and that's great. What that does, of course, is in removing that heap, we know, because we've had some original drill holes, that there's gold underneath the heap. And from our drilling and from the press release that we came out with a couple of days ago, and the one a couple of weeks ago, where we're showing with this new resource drilling that rangefront is growing both to the west, but more importantly to the north. And we could see the mineralization that we know in rangefront extending underneath that current legacy heap. And we couldn't put it into the mine plan because we couldn't mine the heap, because if you treat it as waste, it becomes a strip to that ore underneath, and economically that doesn't work. If you remove that, because it's essentially free, because it's paying for itself, that unloads the strip and opens up the opportunity to push the resource pit all the way to the north, underneath, effectively, if you think about it, underneath that heap. And it opens up something like a 700-meter long corridor of potential mineralization between the rangefront pit and what we call M zone. The stratigraphy is the same, so the rocks are the same, the structures are run through that. So we have every reason to believe that, it's possible that is mineralized all the way through that 600 meters. So what a fantastic outcome, not only for us, for the environment, and also for resource growth and upside down the road.
Yeah, John, this is a good little adder, and obviously past operations already done some work in the sense of just overall ability to basically reclaim that area, process it, and then also get the upside of the leftover gold that's there. So just, and plus maybe some more as well as you guys expand into that area. So very good information, nice little adder and bonus to that. Good information there. Moving on here, I want to talk just staffing for a moment. Since you and I've talked, you guys have brought on some new folks to the development team as well as the board of directors. Talk a little bit about what they bring to the table.
So let me start with the board. I think, we definitely, as an exploration company, we had the right mix of skills across the board to provide oversight and guidance at that stage. Now that we've migrated and we've evolving the company into this development co with a very clear line of sight to delivery, ultimately construction and production, we felt we needed some operating experience on the board. So we were delighted to recruit Lauren Roberts onto the board. He stepped onto the board in September. Ex-senior executive, strong operating background, both with Hecla and with Kinross. And he came on the board to be part of a company that wants to grow and actually construct and operate mines. And so delighted to have him join that team and to sort of round out the skill sets in the board to provide, the appropriate oversight and guidance right across that spectrum. So solid board. In terms of, when I took the CEO seat in June, very clear to me that we needed to build a small but very powerful owners team to execute on the development strategy. So we were delighted to welcome 3 technical players, Tyler Cole, Richard Zagel, and Owen Nichols, to the team. And we also brought on a 4th individual, Charlie Mumford, who's a permitting expert, to join our permitting team. And so today we have 4 technical folk in-house who are essentially the team that has the skill set and the experience to deliver all of the technical aspects of the feasibility study and through detail engineering to a construction decision. So that's Pete Shabasteri, our VPX, who's been with the company for a long time and was project manager on site at Black Pine during the early discovery. We have Tyler Cole, who is our VP projects. He has worked with Evolution Mining. He's been involved in the capital side of heap leach projects. His last role was with Worley in Salt Lake. So he's not only worked on the client side, but also on the engineering side. So he really straddles that skill set. Owen Nichols out of Equinox. He's a resource geologist with a lot of detailed experience building resource models to support leach production. So he's worked at Mesquite and other areas. So he is driving the whole geology piece with a view on short-term planning and ultimately ore production and delivery. And then Richard Zagel, who previously worked at Marigold, was their chief metallurgist, worked as processing manager. He brings all of those leach and metallurgical skills to the table. He's also a mining engineer, so he drives the mining piece as well. So those 4 guys from a technical perspective, as I said, have got everything we need to manage the suite of engineers, discipline engineers that we need to do the feasibility study. Obviously, we need lead engineer, we need design engineers on the heap and so on. So those 4 will manage that team. And then on the permitting side, Matt Zietlow joined the company about 16 months ago. He is a strong NEPA permitting specialist, has permitted a number of heap leach mines, has worked for Kerr, SSR Mining, Waterton. And so an in-house permitting specialist called Gerald Heston, him, Gerald, Charlie, and then our community coordinator, those 4 individuals are driving the permitting side and have deep experience in getting these things through that sort of the NEPA, the US federal permitting process, and also state permits. So we're well covered now, I think, internally with a technical team and a strong in-house owners permitting team.
A lot of different folks that have a lot of experience, John, to support what you're doing. So I appreciate you guys being able to pull those people together from those different operations, bring them in here and get them focused on this project. So I think that's also a very key point here as to some of the staffing that you've brought in here to help assist you drive this forward. So thank you for the update on some of the folks there that are helping you out. On the permitting front, John, any updates on how things are progressing with the plan of operations and, of course, the environmental impact statement work?
So in January this year, we submitted our first draft of the mine plan of operations. That plan has been through 2 turns of review with the relevant agencies. That's the Forest, National Forest Service, the BLM, Bureau of Land Management, and also state agencies, the sort of 4 key agencies that we deal with at the state. So all of those have been through 2 versions of the of that draft document with We're literally this week closing up the latest version. We're due to resubmit that either this week or next, and that will go through the review process. We have, I think, we're going through a really good process with the agencies in terms of discussions, understanding where we're at and what the impacts are. We have a good expectation that we will get to a completeness determination relatively soon for that document. Certainly, we were targeting this Q4 to have that, and I think we're still on track for that. Once we have that completeness determination, that allows us to take the next step, which is immediately the application for a notice of intent. And that's a registration of the project with a completed mine plan of operations or deemed complete. And that is a process that happens in Washington. And it really is a sort of a registration of the project. Once that happens, once you get your notice of intent, and that process is somewhere between 30 to 90 days of that order of the process. Once that happens, the clock starts. You are permitted in the sense of that's the time when you start drafting your EIS, once you have your official notice of intent. And the clock, the government clock says 24 months from your notice of intent to a draft decision notice, or record of decision, it's sometimes called. And so that's the basis of our expectation: Q4 completeness and notice of intent, and a draft decision for the project in Q4 27. That timeframe then would allow us to start construction in Q1 28. It's a short build. The project I described earlier, it's a very simple project. You have to do some earthworks to build a heap. We have ore on surface, so it's a relatively simple sort of early mining. We have to build a small processing facility and a maintenance workshop, which again are not complicated items. So we're targeting a 9-month build, and we would expect to have first gold production very late in 28. So that 29 would be a full year of production.
Thank you for walking us through that on schedule and then how things are looking on the permitting front. Hopefully that'll move along here, and folks will get it in gear and move that forward as quickly as possible. And I know you guys are trying to get as much done as you can in advance of that to make sure it goes through smoothly. So thank you for the update on that, and good luck on that front. And given this project and its history already, I don't see a lot of issues on permitting, but nonetheless still have to go through that process and get everything right. So looking forward to seeing further progress on that. Just briefly, moving over to Gold Strike and Antimony Ridge projects, any updates for us on that front?
So what I've said is that we put the whole process into a bit of an internal review when I took the seat a few months ago. We're still in that review period. We have said that there are a couple of potential M&A opportunities that we're pursuing. We're still in that process, so I'm not able to sort of report on those here. We'll play that out and see where it goes. But we have made the commitment that we will bring this to a head, as it were, before the end of the year. So we give shareholders some clarity on what the plans are going forward, whether we continue with that spin out, whether Gold Strike, for example. I mean, the world's changed a little bit since we announced this in January, particularly the run-up in the gold price, and whether now it makes sense to include the gold, the 1 million ounces of oxide gold in Gold Strike, to include that in a critical metal spin company. The logic for that, I think, was sound when we thought about it a year ago. Today, perhaps there are other options. And so I think we're thinking through that right now. And it wouldn't surprise me if we made a separate decision on gold in Gold Strike, if we do something different with that, either keep it or look for other options. I think Spinco still has some merit. Certainly the Antimony Ridge prospect, it's an early stage exploration prospect. We are excited about the potential. We've done quite a bit of field work. So we've done pretty much everything we need to do. We've permitted drill sites. So it's ready to go to take that next step. And logically, we see that step being taken in a vehicle that's not Liberty Gold. It makes, I think exploring critical metals and that focus is quite different from a focused oxide gold developer. And so for me, logically, the antimony ridge sits in a different entity. Perhaps if we're successful in these M&A opportunities, that makes sense. Otherwise, I think we need to think about what do the next steps look like. But as I mentioned, we'll be back in front of shareholders before the end of the year with some clarity on this one.
Yeah, Gold Strike to me has always been a pipeline project, in my view, for the company. And obviously, the focus is on now gold development and production. Cash flowing is the absolute focus here. So to me, it's always been something that's been a pipeline project that should be considered. But I can see now at current prices, John, I'm sure there's no shortage of people knocking on the door looking to purchase that project. And then of course you have Antimony Ridge project, which fits kind of right into that, critical metals, critical minerals, domestic narrative. And so I can see the purposes of that being separated, or even potentially an M&A transaction there as well. So appreciate you clarifying that. It's good to have these types of problems in the sense of pipeline projects and other assets that have good value. So looking forward to seeing updates as you guys get to those. Well, John, why don't we wrap it up for this update, short of any other comments you want to add here. But for potential investors who are listening in, the company has a market capitalization of about 345 million Canadian dollars. Why should Liberty Gold be considered within the institutional, family office, or retail investors portfolio at this point?
I think Liberty Gold offers a compelling re-rate opportunity. We are just getting the narrative out into the market that the company's migrated from a strategy point of view. It's migrated from an explorer, very successful explorer discoverer, into this very focused development story with a phenomenal asset in Black Pine. I think it's an asset for the moment. It's an asset that shines as gold in a rising gold price environment. And I think as the story starts to become more understood, and we as a management team build confidence in the market that we have the capacity from a technical point of view to deliver on our commitments, as that story gets told, I think we're going to see very clearly the market respond to that in a positive way. If you look, in the sort of the universe of opportunities in this space, oxide gold opportunities, 5 million ounces and above in the US, previously producing site with a very limited impact on site, straightforward from a permitting perspective. There's not a lot of opportunity around there. And I think people are going to start to realize that, Liberty is a bit of a unicorn. And I think those who have supported us will benefit from that going forward.
Agreed, John. Thank you for that. And for further information, how can interested parties contact the company?
Obviously, we have a website at www.libertygold.ca. There is also an info email on the website. I think my details are on the website. Anyone who's interested, please reach out to the company and we will be delighted to engage. I've talked to a lot of people. I consider that to be a key part of my role. And we're delighted to engage in detail or at any kind of level that investors would be interested in. So delighted to talk to people.
John, thanks for the update on the company. We're looking forward to seeing more progress at Black Pine and, of course, at Liberty Gold. Come back soon.
Fantastic. Thanks so much, Andrew. It's a pleasure to catch up with you. Yeah, and keep an eye on the news feed, mate. We've got some good stuff coming out over the next weeks and months. So exciting times.